Welcome back to Stocklabs, another market recap. So we're into summer trading now. First week of June, kind of in the books. Was holiday shortened week from Memorial Day weekend last weekend, and sort of what we were expecting from the prior week into this week was to give up some of the gains that big rally produced last week, but it wasn't as straightforward we didn't just sell off right away. It was more choppy than anything. I think we started up on Monday, and then sort of gave back a little bit of that Tuesday, Wednesday. Then we had a big rally on Thursday, and then Friday erased the whole Thursday rally that sort of ended us back up where we more or less started. So a lot of movement, but not a lot of overall changes by the time the week was through. So, week to date for the indices, best performer was the Dow, down 8/10. NASDAQ was down 1%. It was up 7% last week, so didn't give back too much, but still a down week. S&P down a little over 1%. And IWM was basically flat, so better than the Dow. Bonds got hit hard. We had some employment data on Thursday with ADP and Friday with NFP, non-farm payrolls, and the non-farm payrolls number came in much stronger than people were expecting. I think it was just under 400,000. Estimates were something for around a little over 300,000, with I think actual trader expectations to come in less than that. So bonds got hit hard. Market sold off. That was kind of the catalyst on Friday for giving back all of Thursday. So yeah, a lot of chop this week, but that's pretty standard stuff for sort of bear market trading, basically. If we look at the leadership stocks, now these are the biggest stocks basically in the market that sort of household names that lead the NASDAQ, lead the market. Amazon, big bounce, up 6%. And Google and Netflix were both up. I think last week Google and Netflix were the big underperformers, so kind of not surprising that if there's a lot of shuffling going on between just these big names, that the underperformers one week will outperform the next week and vice versa. Tesla, big down week, down 7%. And then the others, a little worse than the market. So NASDAQ was down 1%, but Apple down 3%, Facebook down 2%, Microsoft kind of in line, with NVIDIA basically flat. So yeah, same sort of thing. A lot of shuffling even within this one, this one group. These stocks are more or less all the same. They're like Terra cap or very large cap tech companies, but portfolios shift among them as well. So yeah, choppy week for these guys, choppy week for the market overall. And yeah, let's see on our breadth. I think for breadth, it was kind of muted overall. Yeah, it's a little bit weak. I mean, most sectors were down. Materials jumped up a bunch. It looks like that commodity and oil trade is starting to reassert itself a little bit. So you're seeing a lot of basic material stocks. They had a few choppy weeks the last month or so, but it looks like they're kind of resuming the trend that they've been on for the year and even further back into last year too. So the top performing sectors, I mean, it's pretty sparse. You can see like it was a choppy week for the market. The breadth overall was it sagged, but wasn't unbelievably terrible, given that last week was such a monster week. And by last week, I mean the prior week to the last full week of May was such a monster week. We had many sectors, 100 and some sectors that were up over 5%. So this week it's, pretty muted. There's only one sector that sort of continued the trajectory was on. The rest more or less were up a little bit if they were kind of around these basic materials and industrial sectors, but the rest of them, even on the downside, we don't have a whole lot of sectors that gave up a ton of ground that they made last week. So airlines got hit hard. Whatever, airlines sort of have traded on their own ever since the whole sector blew up with COVID. Sometimes people get bullish on them, sometimes they just dump out. So nothing to really draw from that. Let's see breadth on if we slice up the market just by market caps. So 1 to 5 billion cap, basically flat for the week, down 0.2. 5 to 10 billion, down 0.5%, so a little worse. 10 to 50 billion, down 1.2%, more or less in line with the market. 50 to 100 billion, down 75 bips. That's a little better than the S&P and the Dow and the NASDAQ. And Terra caps were down 0.8, basically in line with the NASDAQ and the Dow. So, yeah, you could see sort of everything took a pause. I mean, despite the wide ranges with the chop for the 4 days, the 4 days that we traded. I think I misspoke earlier when I said Monday we were up. I think it was Tuesday. Yeah, the day we came back we were up, and then we chopped for a day or something like that, and then dumped it all out on Friday. So yeah, not a whole lot for a continuation of the rally. Kind of that big ramp that came the prior week. Maybe you could call it a consolidation, but the fact that Friday was so weak on its own, it's kind of setting up for maybe retracing more of the prior rally than just what we got on Friday. Now, of course, we could always just take off on Monday, and then maybe it'll just be a different story. But kind of the makeup of the market doesn't seem set up for that. As far as intelligence goes, again, on the bullish side, there's nothing here. This has been basic. This screen has basically been getting emptier and emptier every week. And for this week, the only thing that we have is bearish tech. So NASDAQ, again, probably going to retrace more of that 7% rally than just the 1% that it gave back this week. And on the downside, let's see what is going to move. Okay, a lot of stuff on here. Let's see. I'll resort it. Okay, so Russell gonna held pretty strong this week, only down a couple tenths of percent, but looks like it's gonna take a leg lower this week. And okay, crypto stuff bearish. Gold miners, or this is downside gold miners, so gold should be bullish this week. Okay, another Russell ETF, another blockchain ETF. Commodities strangely rated bearish for this week, so we'll have to keep an eye on that. We'll have to keep an eye on that trade. I mean, it has gotten a little volatile with speculation of when a recession is going to hit or how deep it's going to be if it's already here. So commodities will be susceptible if a recession hits, because once demand evaporates, there's nothing there. I mean, it has no choice but to go down. Brazil rated bearish. If anybody trades Brazil, Got another tech ETF. Got aerospace and defense contractors. And what are the rest of these? Kind of nothing. Treasury. Oh, short treasuries. So maybe treasuries bounce a little bit. Although that would kind of buoy the Nasdaq a bit. So we'll see. I would be kind of expecting downside early in the week that maybe recovers by the end of the week. Just as a continuation of sort of the overall choppiness. Summer liquidity is poor, so everybody's favorite hedge fund managers are, they're off on vacation now. They basically gave some instructions to their junior guys, and they're just gonna do that. So choppy market, range bound market, whatever you want to call it. I'd expect that to continue this week. As far as what the algos are saying, kind of in no man's land here for overbought, oversold. We have to get pretty deep down here to get another oversold signal. These ones in May and April were pretty stressful. Like the market was pretty stressed during those times. So kind of this choppy area in here is where we'll probably live for a bit. Intelligence is, let me see, backtest from this year. So on the hybrid algo, we'd be expecting, some softness this week. Now tech is actually pointing to some bullish momentum, but I always rely on hybrid myself. So a lot of mixed signals, but that's pretty, like I said, that's pretty typical of bear markets after you've had sort of these long periods of enormous ranges. It takes a while for the market to sort out what it's going for. I think that's basically it. Pretty short recap. Week was mostly uneventful. Aside from all those data dumps, we will get the Federal Reserve decision on sometime in the middle of June. And they're going to hike 50 basis points again. And that was part of why the strong NFP number on Friday, hit the market as hard as it did, because people are hoping for those 50 bips hikes to go away somehow. But we don't have there's no reason for them to go away yet. So they'll be around for a while, kind of like what we said the other week. All right. So that's basically it. Like I said, quick recap, and you guys have a good weekend. We'll be back on Monday, and have fun out there. Talk to you guys later.